Did you know that at one point it was estimated that nearly one-third of the world's offshore wealth was stored in Swiss banks? That's trillions of dollars. But here's the kicker. Much of that money was untaxed, hidden, and in some cases, outright illegal. So, how did Switzerland become the global capital for black money? And what's being done to stop it? Before you move on, if you haven't subscribed yet, please subscribe to 10-Minute Quest. Do you know how much black money is in the world? The entire quantity of money in the world is believed to be around $80 trillion. Black money means information on every penny earned or spent that, through illegitimate media, such as illegal activities like betting, extortion, smuggling, and execution of legal activities, is kept hidden from the government. Ideally, in an ideal economy, the government keeps a record of each and every transaction, and that one whose record is not found is black money. Black money cannot be easily used in the market, and thus, it is used to hide and tune it into white. The most famous way to hide and tune it into white people is depositing money in a Swiss account. Swiss bank accounts began insuring deposits in the 1780s, and thus attained a reputation for soundness. In 1815, international neutrality for Switzerland was codified in law by the Congress of Vienna. A windfall of money resulted. Wealthy landlocked Switzerland saw banking secrecy as the way to create an empire on a par with those of France, Spain, and the United Kingdom. After a slight civil war in the 1840s between the Swiss cantons, the Swiss Federation came into being in 1848. Key events of these times were, among others, the founding in 1907 of the Swiss National Bank for the consolidation and regulation of money, building this country's prestige in terms of stability on every financial aspect of life. Later on, other two largest banks of Switzerland, the Swiss Bank Corporation and Credit Suisse, originated in the years after its institution. It is said that Swiss bankers advertised their bank's secrecy as far as France during World War I, and in general, this war has created political and economic turmoil in Europe, which stimulated a rapid inflow into Switzerland. Rich clients weighted by taxes imposed on behalf of war needs moved valuables into Swiss accounts. The early 20th century also saw the establishment of two other large Swiss banks, Swiss Bank Corporation and Credit Suisse, which soon developed into important competitors. But arguably, the single most important factor in the growth of the Swiss banking system, however, was the adoption in 1934 of strict bank secrecy laws that greatly complicated efforts by foreign governments to learn about their nationals' accounts. This turned Switzerland into a haven for the Nazi authorities, with the close coordination by the Swiss financiers attracted an eventual high volume of foreign depositors. Secrecy today forms the backbone of Swiss contemporary banking, which, while criminalizing tax fraud, allows for tax evasion. Swiss banks have above-average capital adequacy ratios, and therefore provide security for customers' money from financial crisis. These have been some of the reasons that helped Swiss banks gain confidence with their clients worldwide. But the question is, how did Swiss banks help facilitate the storage of black money? It all came down to a question of secrecy. Swiss banks offered something called numbered accounts. What this meant is that these accounts were anonymous. The bank would only know the account holder by a number and not by his name. Because of this fact, it almost became impossible for any foreign government to trace money back to the owner. It also requires a minimum of 1 million Swiss francs to open a Swiss bank account, attaining the age of 18 years, a valid passport, a resume, details of the skills, work, and how the money came into possession. The Swiss banks allow international customers to connect anytime, zone, and language in Switzerland. Through digitalization, Switzerland has been among the pioneering countries in connecting users by means of mobile payment systems, at the same time as guaranteeing data privacy. In 2020, one mobile payment survey showed that people living in Switzerland used mobile payment systems more than cash. By the early 2000s, the world had enough. Governments all over the world started to crack down against tax evasion and money laundering. The United States led the charge with its Foreign Account Tax Compliance Act, called FATCA, that forced Swiss banks to disclose information about American account holders. Next came the European Union, leaning on Switzerland to share data on European account holders. When Swiss banking giant UBS was fined $780 million in 2009 for its role in helping Americans evade taxes, it came as a wake-up call. Switzerland slowly loosened its banking secrecy laws and signed agreements with countries to share financial information, but the damage was done. International pressure regarding money laundering laws has made Swiss bank account opening rather more difficult. But at the time of war between Ukraine and Russia, each of them wants to keep his money safe, increasing demand for Swiss banks. The Swiss banking sector has had to put up with increased competition from other financial hubs, as well as pressure from foreign governments for laxity in bank secrecy. Moreover, the Swiss government and fraternity of banking in Switzerland have also moved to further increase regulation, adding more and more transparency. Yet, against this Russia-Ukraine war, Switzerland did not give up on banking secrecy, imposing severe sanctions on the Russian companies and people in April 2022. It became very serious because it was shown in 2020 that Switzerland had more than $11 billion assets from the Russian companies and people. But now, is Switzerland still a haven for black money? It's complicated. Swiss banks are a shadow of their former secretive selves, yet they are still reasonably private. But the global financial system has changed. The emergence of tax havens, like the Cayman Islands, Singapore, and even Delaware in the United States, as the new destinations of choice for hidden wealth. With the rise in cryptocurrency, more creative ways were founded to camouflage cash. But with services and Swiss banks and offering digital assets, they get put under higher scrutiny than before. The Swiss government tried cleansing their reputation, while it still was reaping reputations from banking secrecy. There are a number of ethical dilemmas herein. For years, Swiss banks have argued that they are just providing a service, that they are not responsible for how their clients earn their money. Yet critics say, by enabling tax evasion and money laundering, Swiss banks have contributed to global inequality and corruption. Think about it. When rich people and companies hide their money, governments don't get the tax revenues. That means less money for schools, hospitals, and roads, which can be catastrophic in poor countries. So, while Swiss banks may have kept within the letter of the law, many argue they've failed the moral test. What is the future of Swiss banks? Only time will tell. On one hand, Switzerland is trying to shrug off its tag as a haven for black money. On the other, the demand for financial secrecy is unlikely to go away. As technology advances, so will the ways of concealing wealth. A balance between privacy and transparency will be required. Today, Swiss banks say they are in the wealth management and ethical banking business. It remains to be seen if they can ever live down the controversy of their past. So, what do you think? Are Swiss banks doing enough to clean up their act? Or is the lure of hidden wealth too powerful to resist? Let us know your thoughts in the comments below. And if you found this video informative, don't forget to like, share, and subscribe for more deep dives into the world of finance and beyond. Thanks for watching, and we'll see you in the next video.